We're Smooth 98.1 FM. Good morning and welcome to Business Express. It's a Tuesday, the 5th of March, 2024. Let's get into everything business. My guest is ready and I know you are ready. So you can be part of this conversation as we get along if you send us a message related to the conversation this morning up as a WhatsApp message onto 0809 0809 4440981 will be where we'd love to read the messages relating to Business Express this morning. This morning, I've been joined by Nabila Mohammed, Research Analyst, Chapel Hill, Denham. Good morning to you, Nabila.
Good morning. Thank you for having me.
You're welcome. So let's begin. It looks apparently it's money, treasury bills issues to be looked at, but I'm looking at an article from the Leadership newspaper where it talks about investors oversubscribe CBN 1 trillion naira OMO bills. And this would take us into the conversation. First question is, help us understand what really do we mean by OMO and OMO, basically open market operation bills, and what is their purpose? What is it supposed to serve?
Okay, so OMO bills really are liquidity management tools used by the Central Bank of Nigeria. And what do I mean by that? It's basically a tool that the CBN would use to mop up excess liquidity in the system. And this is mostly seen in times where we have rising inflation, which is, what we are currently seeing in the economy right now, rising inflation, and the CBN just trying to utilize every and any means possible just to reduce the level of money supply in the system. So OMO bills will cater to that, just like interest rates, that's the policy rates caters to reining in inflation on that front. OMO bills is a second instrument that the central bank also uses. And the purpose, as I earlier said, is to mop up excess liquidity. Most of the inflation that is affecting us is largely driven, of course, by the supply side of things. But then there's also an element of demand pull inflation when we look at the money supply and how it has increased between the range of 30 to 40% year to date, which is quite high. So in as much as we're expecting the fiscal side to look at things, the CBN will definitely utilize different means to mop up excess liquidity by
Nabila,
issuing over bills.
okay, so just to clear it for the man on the street who's not as savvy, financially speaking, to help get this, and when we say excess liquidity, so like you stated already, means too much money in the system and all of that. But they would say we can't see the money, so why do you say this is excess in supply?
So just to help the layman understand that particular concept of money in supply, it is not necessarily the money that is in our hands. It's not this actual cash that we have, like that we hold. If we're looking at the monies that are sitting in the bank accounts, all these things are what sums up to money supply. Everything that sits in the bank accounts, deposits that are growing, because we see these banks when they report their numbers, we see that deposits have increased by X percent, and you'll be wondering where that money is coming from, and some of them are just sitting and not doing anything. So these OMO bills are being issued to mop up that excess that is in the market, that is in circulation, and just keep it away from the market so that we will see that the demand side of inflation, that is fueling inflation, is reduced. So that's what I mean really by money in circulation being increased. And as I said, it is far from just the physical cash that we see in our hands that we hold. I'm sure most of us, including you, I'm sure, have not held cash in recent times. It's mostly bank accounts. We do transfers, we do POS, and all those other form of electronic means of transactions. So yeah.
This takes us to when the central bank, that's the CBN, say automobiles are oversubscribed. What exactly do they mean?
So when they say something is oversubscribed, in basic terms, what it means is that the amount they offered, the amount that they got in return was more than what they offered. That's just it. So if I'm offering 50 billion, for instance, to investors, and they are coming with their as high as 150 billion, it means that my offer was oversubscribed because there's so much more amount that is looking for the little amount I'm offering to them. So basically, that is what it means. And what we see in the last Omo auction, that's the one that was held on Friday, we had 75 across the 91 and 180 day maturities. But the 1 year had the most offer and the most oversubscription. In fact, for the other two, they were undersubscribed because the amount that they offered, 75 billion, we had a subscription of around 37, which was low. So in that instance, those ones were undersubscribed, while the 1 year, which was around 350 billion, was oversubscribed. I hope that explains the story behind an oversubscription and when we have an undersubscription.
So, Nabila, in essence, this oversubscription in itself proves the point that truly there is excess liquidity in the system. So, sleeping money wakes up and decides wants to do something now. That's what it's saying.
Really, that is exactly what it is. And it means that, just like I earlier said, the money is not necessarily the money that is in our hands, but what is sitting in the banking system majorly. So it's another way of. I also want to mention that aside just mopping up excess liquidity, which the OMO bills are also used, are primarily used for, it's also used to attract foreign investors. That's when you're looking at foreign portfolio investments. And given that OMO yields are traditionally given at higher interest rates, it just means that why would you want to have your money sitting doing nothing and earning very little when you can have it invested in an OMO bill that is offering a yield, a true yield or an effective yield of around 27%. Some of us might be wondering that, okay, as individuals, can we tap into this? It is not really, it's not open to individuals, it's not open to corporates, it's rather open to the banks, open to foreign investors. So this is traditionally something they use for the banks and for foreign investors and not for retail investors like us.
Okay. This leads us now. I'll get back to you shortly. So we'd just like you to know you can be part of the conversation. We'd like to read your messages relating to the conversation this morning. Our guest, Nabila Mohammed, is speaking to us relating to rising interest rates and Nigeria's banking sector vis-a-vis the oversubscription of the CBN Treasury bill recently. So this leads us to, will this oversubscription also be linked to the recent the raise in the monetary policy rate recently?
So if I get your question correctly, you're asking if the policy, the
Oversubscription,
increase,
can
yeah?
this be attributed to higher rates following the Monetary Policy Committee meeting and the hiking of the rates?
Yes, so this is the outlook. The outlook for interest rates currently in the short term is to the upside. And what do I mean by that? Investors look at the circle that an economy is in. What are they trying to do before they decide to take positions in that particular economy? So currently, we know that at least in the short term, interest rates are going to be elevated. They are going to be higher than usual. So it's not surprising that we would see most investors try to take positions, especially at the short end of the curve. When I say short end of the curve, I'm talking about treasury bills, OMO bills, and other short dated instruments that are giving very high yield. Now, just to give you context to the high interest rates and how especially the OMO auction that was held on Friday. The 1 year closed at a rate of around 21%, which translates to an effective yield of 27%. Now, what does that 27% imply? It implies that our negative real return, when we compare it to inflation, which is around 29.9%, has reduced, coming from how wide that margin was when we looked at 1 year automobiles previously that was around 23% or 21% effective yield. So now that real return has reduced significantly. And that 27.2 or 27.3 effective yield for the OMO bills that was issued on Friday is significantly above the NPR, which is attractive. I mean, most times you are looking for an additional spread over the MPR when you want to make investments, when you are looking for something that is just above the benchmark. And that particular auction gave us that. So it's not surprising to see a lot of investors trooping to auctions, especially for the short-dated instruments, than when we have bond auctions. Because even that happened last month. The bond auction was undersubscribed, but what we saw when the treasury bills auction happened, we saw oversubscription, and the subscription levels were even higher. I'm talking 2.2 versus 1.9. That was the subscription level for the bond. So all these things really play out. This whole hike in MPR, the interest rate environment being elevated is quite attractive currently. And I mean, just looking at how it compares to the MPR itself and also the inflation rate that we currently have. So yeah, you will definitely see investors trooping to that side.
So can you help us define the net interest margin NIM for a bank and explain if that metric will be improved with higher rates, and also factor that into if we have a new federal government savings bond window open this week. The 2-year bond is now 15% from 12% previously, while the 3-year bond is at 16% from 13% previously.
So the net interest margin for banks really is a profitability metric that measures the net return of the bank's interest-bearing assets. Now, let me go very basic and not as technical as I sounded just now. The net interest margin is basically the interest income of a bank, which comes from the loans they give out, the investment securities like treasury bills investments, bond investments that they do, all the interest that they earn on that makes up their interest income. Now, you will get your net interest income after you have taken out your interest expense. And what makes up your interest expense? For the banks, it really just about the cost of deposits that they keep. Now, how much are they paying for the amounts that we are keeping with them as individuals? How much are they paying to us for keeping our monies with them? That's what makes up their interest expense. Now, when you net those two off, what you have is your net interest income. And that is now applied to your average interest-bearing assets as a bank. And once you do that, you come up with your net interest margin. Now, what do I mean by average interest-bearing assets? I've already mentioned that interest-bearing assets are the bank's loans and advances to customers, corporates, and also their investment securities in treasury bills, bonds, equities, and everything that fits into that interest-bearing category. As far as the asset is interest-bearing, it would also be applied to calculating your net interest margin. Now, what do you want as a bank? As a bank, you want a high net interest margin. You don't want it lower, because it will mean that you are raking in more interest income and you're churning your interest-bearing assets to really give you the best in terms of returns, rather than you are spending to keep people's deposits. So these are the ways to look at it. And with the current hike in MPR, what we would not see is a 400 basis point increase to whatever yield on assets that the bank has. Now, you won't see that direct, because it is not just one shoe fits all for the banks. They have a portfolio that they manage, and this portfolio is a mix of loans and advances. It's a mix of treasury bills. It's a mix of bonds. So all these things, the yields on all those instruments, what forms their yield on assets, and you would not have it increase by 400 basis points. It's not that simple, because they are catering to different classes of customers and holding different instruments that have different maturities and different yields in their portfolio. Now, what will actually help a bank to remain profitable and take advantage of this high interest rate environment is if they can manage their cost of funds. That's the interest expense part from growing. I mean, with the rise in MPR, what it means is that the minimum that they would pay for deposits is 30% of the MPR, which is around 6 point something percent from 5.8% that it was
All
previously.
right, Nabila.
So all this, Okay, okay. Let me
All
allow
right, so
that.
let's just we'll quickly sum up a few of this in about a minute now. That would link us to, is the CBN's cash reserve ratio CRR a major headwind for banks? And do you see think we can achieve FX stability in Nigeria this year? In a minute.
Hmm. So starting from the CRR is something that has been since the longest time, and it being increased to 45%. What it simply means is that for every 100 naira that is deposited with the bank, 45% will be reserved. That's just how to look at it basically. And there is now clarity around how the CRR will be charged to banks because they released a circular sometime last month saying that it will be on incremental basis on like every week the increment in deposits is what they will apply the CRR on. So the banks already know how much to expect as debit from the CBN when the week ends based on the increment in deposits that they have. So now that there's clarity, I don't think it is really an issue. It's just for the banks to make sure that they are utilizing their assets effectively to turn it into profit at the end of the day. And do I think that the FX will be stable? I'm tempted to say yes, given how much of FX reforms that we have seen lately. But then I recognize that there are a number of things that have to be sustained for us to have FX at a stable level. And number one is that there should be continuous, rolling out and implementation of favorable FX policies that will be designed to improve liquidity. Because in the short term, really, it's all about how liquid the FX market is. It's beyond just looking at the fundamentals. Right now, what we need is to make sure that there's liquidity in the FX market.
All right,
And
thank you
so
very.
far, oh, okay.
Yeah, so we'll have to wrap it up on that note. We want to say thank you
Oh,
so much, but let's quickly look at a few messages, then we just say goodbye to you. I find
okay.
Luburuko sent in a message saying Omo bills were oversubscribed due to largely the high interest rate, and which Nabila has alluded to already. It's therefore expected to be oversubscribed. One advice I have for the CBN governor is to make Omo bills more open to the general public, especially if the crime, they come in groups. That's fine, Oluboroko stating that, not shutting out some other people who can invest, like you have also talked about, not open to everyone. Then comes Taufik saying, but it does seem the CBN is still printing more money as we see new notes printed in 2024. Is this helping our current state and make us understand, are we still printing more money?
Okay, is that question for me?
Yes, it says it seemed like it's seen some new notes with 2024 on it, and is that helping us if we're still printing notes?
So printing more money is going to be very expensive for the CBN right now.
Yeah.
So they would be careful not to be doing that when they know they have to utilize funds for other things, especially for their day-to-day running. So I would not, not entirely sure that they should be printing more money at this point in time when they themselves are trying to reduce money in circulation.
This is where we say thank you to Nabila Mohammed, research analyst at Chapel Hill Denham, Business Express this morning. Have a great Tuesday. Thanks for your time.
Thank you.